Good day, forex traders. Hi, my name is Darren. I'm from South Africa. I am a trader, forex trader. I've been trading for over a year now, year and a few months. You can say that I'm about 2 years ahead of where I'm supposed to be in terms of knowledge and education when it comes to trading. So I think it's just my mind and the type of person I am that made me be able to comprehend and fathom the knowledge and education that comes with trading. So I know there's a lot more than I have to learn. I'm not saying that I don't want to. I'm just saying there is a lot that I still have to learn to add to my age, I would say, and to my knowledge. As I was saying, I will be showing you guys my daily setup. This is how I trade every day of my life. This is when I notice some shifts in change in the movement of the market and price. This is when I notice that I can use these steps and methods. It's not really a rule-based strategy because I have made the strategy based on my own knowledge and what I found and saw in the market. So let's get a little bit more perspective on this trading strategy. It's basically using support and resistance and the functions that become reciprocals of one another. So it's basically just them switching roles when it comes to the trend and the market type that you are in. So that's the first thing that you're going to have to identify, is that you have to identify market structure, market trend. Also, I want you to have a 50 EMA on your chart. So not a 50 EMA, a 20 period EMA. Yeah, let me just check out 20, not 50. So a 20 period EMA, you're gonna make use of that as well. We want price to be, I'm sorry for all this noise. I live in I wouldn't say a busy area, but I do stay in a nice area. But there's so much traffic that goes up and down my road because my road is kind of a main road, a main road that was designed to not congest, but I don't know what's the opposite of congest. Discongest, I don't know, uncongest, I don't know. It's basically a route and a way to not cause conjunction and traffic, because there's a main road, then there's another main road. I don't know what I'm talking about, but anyway, let's get into the video. Let's continue with the video. What I was saying is that we'll be using support and resistance levels depending on the market type, market structure, and then we'll be using a set risk to reward ratio that I personally use because of my own personal experience. I will share more about that when we get to that part of the video. So let's just get into it. So I'm right now I'm on NAS 100, and I am also, how I like to start off my analysis is that I would like to go to a higher time frame, such as the weekly, so that I can have a good sense of what the week ahead should look like, so that my trades can match up with that of what the weekly is doing, because I trade 5 times a week, so that is 5 days a week. So I have to make sure that I'm selling or I'm buying, or I'm doing both according to how the market moves. So currently we are in a buyer's market, we are in a bullish market, so prices are making higher highs and higher lows. So that's what I'm going to be trading. So I'll be trading the trend and the structure, but there are more key elements because I'll be using a lower time frame for my entries. I'm just going to explain to you guys what I look for and how I start. So the number one thing is I normally look at structure. I go to a higher time frame if I can't identify what type of structure that the market is providing me and what type of trend it is. So I normally start on the weekly, like I said, and then I normally have like weekly key levels drawn out so I can see what price is doing overall in a small chart or period of time. So I normally use horizontal rays, but I come to like using horizontal um, lines. So what I'm doing right now is just looking for an area of support that was used as a resistance as well. So that's what you want to look for in those types of areas. You want to look for areas where price was tested for support and resistance, and I just normally have a two horizontal lines, and then I normally just draw a rectangle or a box between those lines. So as we can see that price used this area for support over here and over here. So as we can see, it does push price in an amazing way up. Like this is a major way that those areas push price. So as we know that price has found support once, twice, and the same area was used for resistance not once but twice. As we can see as well, these rejection candles at this area as well. So as we can see that these are rejection candles, price is rejecting this area. So every time price pulled into this area, once it broke through that area, and we can see that price has changed the market structure as well. So we had a 1, 2, 3 move. So that means that validates that you are now in a downtrend and market has changed and reversed the role. So instead of being in a buyer's market, we reversed, and so this was a double top right here. So price after this double top, price totally reversed. So that's another signification that signals that price reversed, was about to reverse because it was double top, because that is a reversal candlestick pattern. So as we're saying, it's a 1, 2, 3 move. So as we can see, price made a lower low, a lower high, and then another lower low, lower high, lower low. Okay, so now this was an area of resistance because it was tested for support. So when support is broken, it's most likely going to become resistance, and when resistance is broken, it's most likely going to become support. It depends on what type of market you're in and what type of trend you're in. So as we can see, price in fact uses area for resistance 2 times, and once price broke this area, pulled back into this area with this red candle, we had a retest right here on the weekly. So right now I can see that price made a high, a low, so price needs to make a new high. So I dropped down to the daily just to check out what the candles look like. As we can see that price has made a low and is busy making a high right now. It's making a new high, new structure, forming the structure. So as we can see that price made a low, a high, a low, a high, a high, because we are in fact in an uptrend, and that is what price has been doing for the past few weeks. As we can see, price has been just doing forming and making higher highs and higher lows. So right now price is still in this process of making a high. So my entry would have been after this candle over here, this engulfing candle. But this trade I have entered, when was this? Last week. I did place this trade. My trade is still running. I'm just using this as a point of reference based on my trades. So my stop loss, I normally put it below an area of structure that is most likely gonna be an area of rejection or an area of termination. So I'll put it below this area right here, because this is an area of resistance that was tested for, that became support right here when it was retested. So it's most likely that when price pulls back into this area of support, it will most likely find support and move away. So that's why I'm just putting it there. And the risk to reward ratio I use is a 1.4 to 1. So I use this risk to reward ratio because I found that in back testing some of my strategies, I found that this risk to reward ratio gets smashed more than 50% of the time. So that's why I use it. I can use it if I'm going away, or if I'm not going to be on my phone, or if I'm not going to be anywhere close to trading or closing or checking on my trade. So I leave this because I'm confident enough, and with how much I'm risking on each trade, that I can leave this out to play even overnight. So that's how it works, and that's an example of my setup, and this, I'm a swing trader, so this would have played out probably the whole week. But if you guys want to know how I do this in a lower time frame, I can do that as well. So we can just, I will remove this and we can just go to a lower time frames. So you say now you are a scalp trader, so that is what you are busy doing. So the same thing applies, right? The same thing applies. We know that we are in a buyer's market. We know that we are in an uptrend. We just saw that from a higher time frame. So the next thing for us is to make sure that price is above the 20 period EMA. As you can see, price is above the 20 period EMA, and we want to make sure that price also has a bit of momentum, because we don't want price to do something like break above like that, and then we find that the next candle it just plunges down. We want to see a couple of candles, green candles like this example here. 2 green candles would be enough, 2 or 3, so that would be enough. But I normally go after the once price breaks this 20 EMA and the adjacent candle is green, I would normally, that would be my chance to enter. So but I would suggest that you guys just wait to see how much momentum this actually has, because you don't want something to happen like this over here. Price crossed, but the next candle was red and then got stopped out. So rather wait for the second candle. So right now we want to draw up our zone. So this would be my zone. This is on the 4 hours. So what I want you guys to do is, you guys should have two or three time frames you guys should use. You guys should have one time frame where you use that time frame as structure and trend, and you want the second time frame or third time frame to be your entry time frame. So look for structure and trend on a higher time frame and look for an entry on a lower time frame. So right now I'm on a 4 hour. Price is in this area of support right now. As we can see, prices, this was a high, this was the pullback, and this price needs to make a new high. So if I want to get into the straight right now, which I'm going to after this inverse head and shoulders right here, we can see price made the inverse head and shoulders and started pulling away. So if I want to get into the straight right now, let's go to the hour. As you can see, we have this doji right here, suggesting that price, we have a lot of buying pressure coming in, buying momentum. As you can see, price made a high, a low, price making another high. So as you can see on the hour, we have the same thing going on. But what I normally do when I'm in an area of support, I normally have this thing, this exception I do for myself. If I see 2 green candles, according to the trend and structure, you need to have the according trend color candles as well. So you need, if you're in an area of support, if you are in an area of support and you are in an uptrend and price has pulled back to an area of resistance which is being retested for support, at that area that price is at, you want to look for 2 adjacent green candles. That's what I, at least for my exception, my rule. So I normally would enter after those 2 green candles with my stop loss below an area of resistance that was tested, that should be most likely be tested for support, and price shouldn't be pulled back that far, and I would have a risk reward ratio of 1.4 to 1 risk reward ratio. So I would just leave that there, and this would be my entry, and this will play out in the next couple of days. But